Breaking news! The internet is rapidly growing and many internet companies are starting up. Investors are very optimistic about these companies.
Yo, Amazon, I don't think we need to worry about revenue. We should just focus on growth.
You sure about that? We should also focus on investing on capital too.
Nah, we don't need that.
Whoa! The internet is growing. I better invest in some internet companies. These seems like some really good options to invest into. Whoa, these stocks look really good.
Yo, what's good? I'm the CEO of Pets.com.
Now I got a question for you. What are your plans for making profit in the future?
You know, profit doesn't really matter right now. If we just focus on advertising, then eventually we'll become popular enough to make profits.
I like it. It sounds good to me. Huh. These stocks are also pretty good.
Oh, I'm the CEO of Amazon.
So like, what are your plans for the future?
We have some business goals and investments.
Yeah, whatever, bro. Just take my money.
All right.
He says, oh my gosh, my investments are going crazy right now. Whoa, breaking news. NASDAQ reaches an all-time high. That's crazy.
Oh no, money out of money. Maybe I shouldn't have spent it all on advertising.
Oh no, I'm starting to lose money. The good thing I invested in capital and had these business plans. Otherwise, I would run out of money.
More breaking news. The internet companies are burning through money. Experts suggest that they're massively overvalued. But they've been doing me so good. They've been getting me a lot of money. I won't sell just yet. More breaking news. Everybody's panic selling. Oh no, look at the market. I gotta sell before I lose all of my money. Hey, Pets.com. I need to sell my stocks. I need all my money back. Hey, Pets.com. Yo. Oh, shoot. They went out of business? I'm going to lose all of my money. I lost all my money already. Amazon. I need to sell all of my stocks. I need all my money back.
This is all I have.
This is all you got? I invested thousands of dollars into your company. What happened to it?
Well, you know, the stock market is going pretty bad recently, so this is all that it's worth.
I'm gonna be broke.
Because of Pets.com lack of business plans for the future and the investors' inability to realize the overvaluations of the startup companies, they both lost all their money as we entered a recession. Here's a more in-depth explanation of the dot-com bubble collapse by Stanley, Jaden, and Cesar. What was the dot-com bubble? The dot-com bubble was a period of rapid growth in internet companies using the dot-com. This lasted over a period of 3 years before a massive downfall in stock prices and ultimately recession. The rise of the dot-com bubble. We'll be talking about the rise of many internet companies, as well as investors blindly investing in their stocks without doing any research. There was widespread growth of the World Wide Web, and the internet led to many internet companies starting up. There was also low interest rates that increased startups and made investors eager to invest, and they also invested a lot without doing research. Dot-com companies. Many dot-com companies spent large amounts of money on advertising and promotion to build brand awareness. They also prioritized growth over profit, often operating at a loss. They also hoped to gain popularity to become profitable later on, and they had unsustainable business practices. Blind investments. There was lots of hype over new internet companies. There were low interest rates that led to high-end investments, the loanable funds graph, and venture capital, which is funding to the dot-com companies that had high growth potential. The dot-com bubble burst. We'll be talking about without profitability or business plans, companies begin to run out of money and capital. The market peaked on March 10th, 2000, and loss of confidence and mass sell-offs in tech stocks. The burst. There was over-evaluation of the dot-com companies, meaning they weren't as good as people expected. And on March 10th, 2000, stocks were at their highest. Mass sell-offs. Market realizes that many of these stocks are overvalued. People started to panic sell their stocks, and by the end of the year, $1.755 trillion had been wiped out of the market, with internet companies losing an average of 75% of their value. The aftermath. We'll be talking about how the stock market started losing value after everybody sold their stocks, and how most internet companies started shutting down after losing value. Most of these internet startup companies went bankrupt. At least 360 companies, including Pets.com, Webvan, eToys, and many more. This costed the economy $5 trillion, and the economy went into a recession. There are some exceptions, including Amazon and eBay, who almost went out of business. Thank you.